We came across the profit ratio indicator on Friday, and there's actually a third option on here. And so if you click buy and sell, you can get quite a nice little graphic here where it tells you like the interchange of the profitable traders. So we're not interested at the point in time, at this point in time, we're not interested in the majority, we're looking at the minority. And we know that there must be profitable traders out there in the world from just common sense, right? So if we did the same as those guys, then that would give us a decent edge. So it's this case, we're not looking at the majority, where we're normally, when we look at sentiment indicators, we're looking at like the dumb herd. We're not looking at the dumb herd on this one, we're looking at the smart money, the smart retail traders. So let's have a look at an example where we can potentially use this, where we had a, let's maybe zoom out perhaps. Okay, so we had quite a long no chop here. It was fairly decent move from the profitable traders. So they concluded this position around about here. So they got out here. So you think, oh, that doesn't look so good. Let's zoom out. Now, where did they go long? Zoom out. They went long here, right? And they held all that time, and then they got out here. So they made a lot of money. Admittedly, they could have probably got out there, but they're probably just looking, just to see if it will continue higher. It didn't, and that obviously marked the top. So where they had an interchange was there. So they went long around about here, and then they got out there. And then they went long again, you can see. So up we come. And then they sold. Down we come. And then they went long. Zoom in. So this gives us a big heads up, I think. Oh, there's maybe a slight delay. Yeah, it's actually quite accurate. It's quite good on the hourly, actually. I was looking at the smaller time frames, but this is how we could potentially use it. I don't want to make this a long video because I've done a few takes of it, and I've talked about gold and how we're extremes. And there are things that we need to note. Is that when we are at very extremes, we have to be careful because there's obviously exhaustion points and things like that. But we're not close to extremes on this particular instruments. And also, one other thing that we need to be aware of is that when we have a big risk event like the FOMC, it's going to really skew this, and the volatility is going to really hurt the accuracy of this indicator. And so you can see how they've gone long. Then they went long. And then they added, right? They sold. It was pretty accurate. Then they sold again. And then they sold again. So has enormous potential. So how would one use this? So because at the time we have a cross, but we're not sure if we're not going to get another test. What you could do is wait for it to slightly just get over that high, and then that'd be confirmation. You see how because at that point in time you weren't sure whether or not we were going to see a continuation or reversal. A good way to see if we're going to see continuation is a break of a high, and we had one here. So yeah, I mean, we are talking not that much profit. You're probably looking like a little bit of profit there, 30 odd pips potentially if you waited for that high to break. Likewise here, you probably might not have wanted to enter there. You could probably enter here, but then you are leaving it fairly late. Maybe get a decent entry, 28 pips-ish. Because obviously at the time you don't really know if it's going to see continuation or not. And we had quite a bit of chop. We had a bit of chop here, obviously at London Open, and they've gone long. So have a look whenever you get a free time. And this is just one instance on one instrument, and we're using the hourly. And so there is just one last thing I need to say is how this 65%, 35% is made up of. Obviously it equals 100%, but that's a breakdown of the profitable traders. So it examines the profit buyers. Then it's 16%. It's low, but it could be worse. And the profit sellers is 11%, 11.7%. So it simply adds that value and then we get a percentage from that value. So it adds them two together, and then we can get like an interchange of of the bias and the potential trend change opportunity, and it's very interesting. And so this could be incredibly powerful. I'm going to wrap up now. Just be careful because we've got FOMC this week. And if you see any trade ideas in any of the channels in Discord, do remember, you have to be very careful. Don't trade any of the signals blindly. Do your own research. It's really important. It's very, very important to know where your exit is. If you don't know where your exit is, then you'll probably encounter a loss because it could come down and then it could just continue lower. Despite this indicator, there are lots of other things in play, like fundamentals, and we've got the New York Open in 30 minutes. We could have a pretty heavy sell-off. If so, this is going to fall, and this is going to be less effective. So there are things to just remember. Trade carefully, especially this week. It's going to be quite volatile, and so maybe have a look at this whenever you get a free moment, and it has great potential. Hopefully that's clear how this is calculated as well. So have fun and let me know what you think.